Alrighty, we are live. Let me pull up my YouTube chat on my iPad because, like I said, I have not been doing it like I should. For TikTok. Alright, we're gonna go back to backtesting the regular way. Going right back to 15-minute analysis, a 15-minute chart, marking out provided gaps and things, and then executing on the 1 minute at 10 a.m. just are my original strategy. And we'll see how good the 10 a.m. reversals go. Trying to get my bearings. I mean, my bearings are good. I just feel I'm very excited about the week to come. And I need to make sure I'm not trading terribly because I'm excited is the problem. We all have it. Yeah, I went to next New York session. It doesn't want to do it. Maybe reload. I'm going to live trade tomorrow on YouTube as well and see how OBS works with NinjaTrader. If not, if it's still being slow and weird, then we will have to just not and only live trade on TikTok by 9:55 a.m. Oh, let me show you price action today. So price action today was not terrible, but it's not what you want to trade. So I don't mind trading holidays, but the candles look translucent. And this is how we talk about when you go back on replay on TradingView, how the candles just look like ghost candles, like they're barely there. However, like great, 10 a.m. reversal. Another one was the macro down, liquidity sweep reverse. Like you could have traded this today and made money, but the way these candles look is insane. But it still did some decent price action. Even here, some good price action. I mean, this is obviously now picking up for tomorrow, Tuesday. So, but we still have some like weird, choppy, robotic candles going on here. But you could have traded that if you wanted to. But yeah, let's go to back testing. I'll make this chart bigger so y'all can see how we do it. Let's go to the next New York session. Oh, okay, I said, why it's not working for me? Okay, here we go. All right, 15-minute chart. We have a fair value gap here. That looks like it's about to get inverses respected once. And then we have liquidity here at relative equal highs. Honestly, we'll just do it there. It's very close. I mean, we'll mark both for those who need to see it. London and Asian. Then we have a 15-minute fair value gap down here. A bullish one, so I make it green just so you know the difference. And then we do have one in here. And then liquidity points on the sell side. We do have equal lows, but we already swept this one. This is the sweep we reversed from. So let's see if we reverse. There's also a gap up here. That's right above liquidity. Actually, let's do this one. There's one here. This is about to get inverse anyway to go higher. So I feel like this one's already about to be disrespected. Let's see if we come into one of these up here and reverse. So go up 10 a.m., get a reversal out of these. Is what it's giving, but let's see. All right, we're going on our 1 minute chart. We mark out 10 a.m. because we don't take a trade before 10 a.m. If you're a 9:30 trader, you're probably catching the move up, but let's see. It reversed straight from there. That's what you want. It bounced right off of it. So it didn't inverse it, actually. This is why you let trades play out. It didn't inverse it. It tapped into it and ran down. We're about to inverse this one maybe, or we're going to bounce off this to go higher. Let's see. But 9:30 traders, it's a decent move down there. All right, we're at 10 o'clock. Don't have a market structure shift yet. Could maybe give us one, but we don't have a market structure shift yet at all. Now we do. We have a swing high broken, and we have a swing high. This candle really broke above all these. This candle here, It tapped back into a fair value gap. If you had a fair value gap entry at the top of the fair value gap, stop loss below the low, and then we take it back up to liquidity min at 930. I don't know. I feel like this could go lower, but we do have an inverted fair value gap. Not inverted. It came down, respected it, and we candle closed out of it. But this strong this strong red candle is kind of scaring me a little bit. So let's move our stop loss a little lower. Boom. So we were right. 10 a.m. reversal. Boom. Oh, it's not what I wanted to do. Great strategy. You could even maybe see if it goes up to the next one. Let's see. Oh yeah, it went to all three. So beautiful trade. 10 a.m. reversal. That's why I said, we don't care about the 930 move, because yes, this is a great move, but our 10 a.m. move is always usually, not always, the biggest trade of the day. This is the trade that takes you into the big body of the day. The 10 to 2 p.m. candle. So that's why we trade that. Could this be caught on a higher time frame, like a 5-minute or 15? This is the 15-minute right here. So yes, you can catch this on the 5 and the 15. I just realized sometimes my entries are super late on the 5-minute. I left the 1-minute time frame because I feel like you get faked out more on the 1-minute. But with the bias and overall analysis on the 15-minute, you shouldn't get faked out as much. But you can trade the 5-minute. Your entry will just usually be later, so your stop losses are bigger. Like on the 5-minute chart, you might not have gotten into this full candle close way up here. Or you would have maybe got in the middle, or had your stop loss right here when it made a gap and it came back to this gap. So yeah, you can trade this on the 5-minute. All this works on all time frames. I just want to master the 1-minute time frame because I just feel like my entries are better. So I would have gotten at this candle close here for a 1-minute entry. But yes, you can trade this on the 5-minute, 15, whatever. And I'm just showing you how you really only need analysis on the 15-minute if you're going to trade the 1-minute chart. You don't need to go on the higher 4-hour. Obviously, like that one trade where it came up to liquidity a bunch and then it ran all the way up, that probably was going to a 1 day or 4-hour fair value gap. So there's days where yes, you'll get a better run on days like that, but usually on the 15-minute it shows the same stuff. So yeah, great 10 a.m. trade. Let's go on to the next one. This is how I trade every day, and then I'll be trading this live tomorrow, so enjoy my lives. I trade this live every day at 9:55 Eastern time is when I get on the charts. All right, let's make our 15-minute chart big. Like I said, I just look for liquidity and imbalances. That's it. And that's usually what the market is eager to go to. So we have two lows. We have Asian low, and then we do have a gap under here that's in the low. Then we have the highs up here. And we do have a lovely high up here. We do have a 15-minute gap that we just inversed here. And there's no more gaps to sweep liquidity, so let's see if it, again, that might happen before our 10 o'clock. We'll mark 10 o'clock, and then we'll see if we get continuation or a, reversal. Probably gonna get reversal if we, alrighty. See, this is a 930 fake out right here. This is a strong wick up, strong like overselling, and then just came right back on you. This is a 930 fake out. This is why I stopped trading at 930. Yes, you get good trades sometimes like the last day, but you really got faked out immediately, and then obviously you could have got back in on this candle. Let's see if we get a 10 a.m. reversal or a continuation. Alrighty. Now, obviously, if you got back in, this trade ate up your losses. Alright, so we're at the liquidity point. Strong. I mean, it's giving good continuation. So, especially Jesus. Unless it wants to go all the way up to here. I think it's a little far. So I'm gonna wait for one more candle. I'm gonna wait for a few more candles before I play an expansion, or this is just a day I won't trade. 'Cause there's a time where expansions are super clear. I mean, right at 10 a.m. the expansion was clear, I'm not gonna lie. But we were at this point already, so I would have waited for more candles, like maybe got in on this candle. Because we're at a liquidity point it can reverse from. Sometimes you'll get in and then it'll just reverse. So let's just see. Okay, now waiting for my reversal. We do have a gap here, and we inverted this gap here. We love when they line up that way. Like I said, I just felt like we were reversing from there. I still want to wait this out. I want to bounce off of one of these gaps first. We already got a wick kind of, but in case it wants to go higher like that, I had a feeling. Okay. So yeah, this probably would I just wouldn't have traded. Yeah. I just wouldn't have traded this because of it's just that we don't have strong signs of going in the opposite direction. We did, invert some fair value gaps, but we didn't really break down from it. At 10 a.m., we did have a lot of space from the EMA, so maybe you could have took right at 10 o'clock, stop loss below this little red swing low, and then, it did keep going, so let's see how far you could have. For like a 1 to 2, 1 to 2.5 you could have got for a continuation play. And it kept running. It did keep running. And the 15-minute is showing it's running, but also the 15-minute is showing how inconsistent that part was. How it was all sideways trading. So this is one of the things you need to pay attention to. And that's why the EMA does help. It shows you like, okay, we got some space. We did start tapping into it here, but we did have some space at 10 o'clock to keep riding it. And let's see if it goes all the way to the top one up here. Probably not in this day, but all right, now we're 1:30 to 2:33 o'clock p.m. and then we reversed at that point. But yeah, you could have took it up for a nice 1 to 5. So reversal traders just wouldn't have traded that, which is fine. Or you might have played the expansion if you saw it. I play expansions sometimes, but when they're clear. So, this candle is pretty clear, but then it chop. So, yeah, either one. Y'all will know and you'll trust yourselves. I probably, wouldn't have traded that though. Let's go to the next New York session. And let's mark out on this 15-minute. We have liquidity from Asian here with a lovely 15-minute for value gap. And then a liquidity below it. And then we have equal highs to the upside. With a lot of, obviously, fair value gaps in here. Next liquidity is this swing high up here. And then there is a gap here. We'll see if it bounces off of this or inverses it. We shall see. We'll go on the 1 minute. Mark out our 10 o'clock. Like I said, if you trade at 9:30, then, that's a nice break retest of the EMA. I think it's going to keep going down with that. Boom, yeah. That's a great 9:30 trade. Nice tappy tap to run down. Hopefully we get to hear by 10 a.m. this sell side or reverse. Okay. This is something I would play. I'm not going to lie to you. We got a strong space between the EMA and liquidity right there. I'm going to have a tighter stop loss, like a 1 to 2. Oof, went my way a little bit and then stopped me out. This is why continuations are hard or weird, because see how that last one played out well? I would have sold in profit on this. I definitely would have, or had myself to break even. Or it can keep going like it's going your way, even with EMA space, and then reverse, because we usually wait for that 10 a.m. reversal. We do have an inverted fair value gap here. And then where did all those other gaps go that I had just drawn? That is weird, but we have an inverted fair value gap, and then we have market trigger shift here. Let's see if we do actually reverse. This could be a fake out day, or we just got faked out on both trades. Hopefully not. But we had those equal highs up here somewhere. Yeah. All right. Well, stop loss too tight. Went our way, but stopped us out. So again, stop loss, you gotta have it. Gotta have it big on certain trades. Let's see if it ever hits our TP. I mean, this is 130. I'd be off the charts and I'd sell in profit. This is all in profit. So you just take your little small gain, call it a day at this point for me. But if y'all want to hold it, y'all can. But I would. Oh, well, yeah, if you held it, boom. It went our way a bunch. And this is exactly what we're talking about. If your stop loss is big, it will usually give you a big move to combat the stop loss. So my stop loss being tight, again, as we've seen on my backtesting sessions, that is probably my biggest issue. When sometimes the stop losses are big, like the market trigger shift happens, we didn't get the inverted fair value gap till way up here. I don't like having had my stop loss this big. I love it when the market trigger shift happens kind of down here and the stop loss is like this. But you know, that's how it is sometimes. And or I would have got stopped out and got right back in the trade most of the time. I'll have a tight stop loss and then just get back in the trade. So great trade. This is how you trade all the time. I mean, this was a nasty mess. And then obviously you just, so this is one of those days where, you know how some people say they use trailing stops? You could set and forget, even though 4 p.m. a lot of us need to be out of the trade if we're trading on a funded account, but you would have definitely been out of the trade for that 1-to-1, unless you held it for your 1-to-2 or 1-to-1.5. You've been out before 4. So it's not the best of trades, but you would have made profit this day no matter what. You either would have sold in the zigzagginess, unless you sold right here for a small loss when it came down the red again, or you know, whatever. Not a great trade, but decent enough. Decent enough. Next New York session. Why risk so much? Because with ICT, your stop losses are always the swing high and swing low before the reversal. So that's the market can trade all the way back up into the swing high or swing low into the reversal before and go your way. So sometimes your stop loss will be big. That's just how it goes. Or don't take the trade. That's just how ICT and how the markets work. Some days your stop loss is going to be super tight and super small and it's going to be beautiful, and then sometimes they're big. So you either just have a big stop loss or you just don't take the trade. That's something you're going to figure out on your own. All right, we have a bunch of 15-minute fair value gaps. I prefer a big stop loss and winning the trade because I know it's going this way, but then I do get scared, get stopped out, and wind up losing anyway. But I'll get back in and make my losses back or have a break-even day. All right, we have a bunch of gaps down here. No liquidity sweeps or liquidity points to way down here on the 15-minute chart. So, I mean, it could just run through all these. I might just mark this one too. And then let's just see what we get after 10. I kind of slowed down backtesting because it's hard to have both ES and NQ up for me. I agree. I got an indicator now for ES, for S&T. I don't want to watch it. I got an indicator and I'm not watching ES. It's just too much. I don't have a big screen. All I have is my Mac. One of my funded payout gifts is gonna get the 3-screen extender that you see on TikTok and Amazon, because I travel. I'm still my digital nomad like traveling phase, so I can't get like a whole desk set up monitor PC thing going on yet. But I definitely plan on getting me some more screens. But for now, I just use the indicator. I really don't care what people say. How far should your fair value gap go over? What do you mean? There is no how far. I don't know what that means. What do you mean? You swing trade or do you trade the daily range? I intraday trade. I only trade for 2 hours, not even. Half the time it's like an hour, 30 minutes a day. I just trade the 10 a.m. to 1 p.m. at the latest, usually 10 a.m. to noon. So I don't swing trade. I'm an impatient person, so that would not work with my another kind of fake out E thing at 9:30, but not as bad. You could have played this 9:30, ran down. It didn't stop you out if your stop loss was at this high. If it was at this high, you got stopped out. But if your stop loss was here, you wouldn't have got stopped out, and it ran down, obviously. So not a bad trade. All right, 10 a.m. We do have kind of strong signs of a reversal, but where do we want to go? I feel like we're already close to these highs. So maybe I'll wait for it to sweep there and go lower. Or you could take this trade up to here if that's what you feel. Yeah, I had a feeling we were going lower. Do we get a setup? We get an inverted fair value gap here, bounced and retested it. Another one where your stop loss is kind of big, sadly. You gotta have it at least behind one of the swing lows. It should be above this one, but at least should be able to take this trade now down a little further for something, hopefully. Hopefully. Boom. Boom, boom, boom. Great trade. Calling it like you see it. You can just tell. Like sometimes, like if liquidity is close, like you could have risked maybe on this little trade, and then you would have been mad and you hit your stop loss. Just came in reversed. I need to be better at like marking a fair value gap and waiting for it to get inversed or respected. So like I'll mark a gap like this and only be ready for it to get inversed, and then it'll bounce off and run. And I'm like, oh, I could have gotten that trade, but I'm just so obsessed with it getting inversed, or vice versa. I'll mark a gap and only wait for it to bounce off of it, and then when it inverses it, I'm not ready. Like having a bias off a fair value gap, I'm like, please, what's your motto? 10 a.m. reversals or expansions, but mostly reversals. However far you want it. Yeah, I played just 10 a.m. I thought you get the least amount of fake outs, and then this was clearly an expansion play. I called it, but usually I would love just a reversal to the upside, but it's giving like we are running down. We have all these fair value gaps. We have all this to rebalance. So I just had a feeling we were going to go lower. And I got in, and then, yeah. Lined up beautifully with a nice EMA entry as well. This is it. So that's why, like, you don't have to get mad at the 9:30 trade. Now, today was the day where the 9:30 traders, yes, would have been in, and they would have made like 1 to 12, so in the 20s. But we still get good entries at 10 a.m. and or when it's a reversal, we make more. So, or you can trade both. You can go at 9:30. I thought about going back at 9:30, but I don't know. But yeah, I'm trying to get my funded account this week for sure. For sure, September. I want to get 150K funding. I was trying to get 300K, but I'm like, it's just a waste of keep buying challenges. I know people like to stack their accounts, but it's like stacking accounts and not getting a payout. Like, it's not worth it. So I want to get my 50K account. I'm going to get a 100K account, and then I'm going to just trade and get payouts, and then get one more 150K account, and then after that I'm done. I'm just going to keep copy trading my live account, growing my live account, getting payouts here and there. I don't need $1 million in funding, I feel like, in my opinion, but to each their own. All right, we have a bunch of gaps up in here. We have this one that's bearish, and we have another one right on top of it. This is the 15-minute chart. So it's giving either a reversal here to go higher, or it's giving we run down to fill some more of these big ass gaps in here and take liquidity on the bottom side. And I don't go on with the bias for those who don't know, because people like to ask, like, what's your bias on the week or whatever. I don't trade that. I mark options for it going up. I mark options for it going down, and then I play whichever one happens at 10 o'clock in the morning. Because it could go down at 9:30, and then I'm playing it up at 10 or vice versa. Alrighty, go down to the 1 minute. And let's mark out 10 o'clock. It looks like we're bouncing out of this gap, but let's see. It's not 10 o'clock yet. Okay, now it's 10 o'clock and we are chopping it up. So I don't have a good feeling. Maybe we might keep going lower, though. It was what it's giving. Came up to this big ass gap. Yeah, trading sideways. This is nothing we want to get into. All right, nice displacement out of it. I don't like this fully, but I don't hate on the 15-minute where it's going. So let's just take this trade to here for 1 to 2. And let's see, boom, boom. Good displacement off that, and then now we inverted this fair value gap. If you know what that means. It's a bearish one, so we close above it. Strong, good signs to buy. Liquidity up there, and let's see, there's that London liquidity that you can maybe hold out for. No, just want to take London. This is why I always want to take profit. Like some days it runs the rest of the day and I left so much money on the table. But for me, I'm just taking liquidity to liquidity, get my money and going home. Whatever happens after that, doesn't matter to me. Or you could have played this reversal back down. We swept this liquidity and we see it reverse nicely off of it. So we could have took our trade here, got out. We see it bounce up again, react off of it. If you want to take that trade, you do have a regular market structure shift, fair value gap entry, a regular ICT entry at the fair value gap, stop loss below the high. See how this one's smaller, but some days, it's just bigger, like here. But once we close below this, we are now obviously going back down a downtrend. And obviously liquidity, you can take it here for a 2 to 4, a 2 to 7, and then we'll see if you get 3.8, or even just the lows of 9 o'clock, the pre-market lows. Boom. So honestly, that 10 AM reversal was a bigger trade, and that's why we're talking about how I usually just wait for that. We did get a nice continuation play, wasn't bad. This was not a reversal play. This was a continuation play. It did kind of reverse out of this fair value gap, but we usually would just wait for this liquidity sweep. There was no liquidity sweep in this trade. This was just a fair value gap inversion trade. This is a liquidity sweep now, fair value gap full trade, and it's a nice, lovely one, I should say. Like I said, if I take this and it does reverse my way, it's still a win. Like, it doesn't matter. Obviously, this is better, but, if I take a win, this is the first thing I see, and I'm eager to take it, then I'm just taking it. Because on the days where this just runs up the rest of the day, then it just runs up the rest of the day. So, yeah. I don't take 2 trades if I had a win. I only take 2 trades if I lost the first one. Yeah, this is a beautiful trade. Right here. This was a nice one. It just traded in between. 9:30, we really got kind of faked out. Unless there's your stop loss here, you could have held when it came down and then came up to that liquidity point. But if your stop loss was here, you got stopped out and took it to there. But yeah, that 10 AM reversal is just a beautiful strategy. Let's go to the next day. 15-minute is also kind of showing you where it wants to go as well. Your higher time frames, New York session. Boom. Okay, 15-minute is looking. Oh yeah, we swept liquidity here already. Did we sweep this one? Not quite, and we're in a gap let's mark out this gap. It needs to be green because it's a bullish gap. We see we come down in there, but we're already in this big ass gap here. 15 minute. I mean, we already bounced out of this liquidity sweep. This is a pure liquidity sweep, a wick and then reversed. We do have a gap here in case we want to come down into it, and then we have one here to inverse for our going higher. I know it's when they're close like that, it's weird, but it is what it is. Then we have liquidity equal highs up here at the London high, and then we have one here that's super close. I just mark, like, if we go up and I get a trade, I want it at one of these points. If we go down, I want it at one of these points or below this point. You know, that's how I do things. And then you'll come on here and you'll mark out 10 o'clock and you see what happens. You'll just see what happens and what the market wants to show you. Alrighty, 10 o'clock. We're too close to this liquidity point for me to want to get in buys. Okay, now let's look at the 15-minute first. Are we strong on buys? I'm still nervous because, like I said, it could reverse from here. We do have a gap on the 15-minute here that is about to get inverse, so then that would like extra confirm. This is a big run. We can wait for a little more confirmation. See that wick on the 15-minute is came in and want to go back down. We do have an inversion for value gap here on the 1 minute that was just made. I know that this is a day where there's a lot of gaps happening. Sorry to those. And we have one here, made on the 1 minute to go lower. I'll mark it as yellow. So I might, and we just crossed below the EMA, I might take a short here. Stop loss above the high. Let's see if we can go down to the lows here. But again, this 15-minute candle has not fully closed. It can still close green, and I'm gonna show y'all what that looks like. Okay, good, close red. But sometimes like you'll be in too early and it'll close green and fake you out, but good moves. Let's see if we continue. Boom, lovely trade, lovely trade. This is why I say if we're at liquidity point for continuation, we need to wait to see if it's going to reverse. If not, or wait for it to push higher above it first. Our next liquidity point was pretty big, so we could have even gotten a trade anywhere in here, like let it push. Or there's days where the only liquidity point, like not this one, the only liquidity point is up here on the 15-minute. Like there's days like that where we had liquidity here, but on the 15-minute, this is just a strong rundown. We were going back up to there. So you just wait, you be patient, and you wait for a confirmation. You can even wait and get in off displacement, which I'm trying to do more, or at least for my full port. When I do my 100K account, I want a full port and get funded in one trade. So I'm probably going to start getting in off of full displacement candles and write it down, but we shall see. That wasn't a bad loss. See how tight that stop loss was? Nice. And then obviously if you got in here, you just had to have your stop loss above there. It just is what it is. That's just how the market works, depending on how your entry goes. Let's do another one. Go to next New York session. I know Tay was talking about how he's tired of backtesting. I totally get it. I just feel like this is helping me because I'm getting too excited. Like I'm already like I feel it. Like I'm profitable. Like for real. Like I have my strategy. That's like my $1 million strategy. I'm doing all the things, but then I'm like, don't do that, and then your emotions, you get fucked up because you're just looking for trades because you have this model now. I'm trying to like, so this backtesting has really helped me like just trust my model and don't go in crazy and looking for trades. It will give you trades, as we see. It gives us trades every day. It gives you trades at 9:30. It gives you trades at 10 o'clock. There's nothing to rush. So do with that what you will. Because someone posted on like Twitter, like the hardest part of trading is patiently waiting for your setup, which is also hard. You can know how to trade, but you'll just be looking for shit. And then having the courage to execute, because some days you won't. And then it was one more, like having the patience to let your runners run or something. I forgot the third one. But I'm also hoping to have a Discord by, I don't know. We'll see. Thoughts on NVIDIA, Tesla, and SPY this week? I knew it was coming. No, I trade futures only and don't trade stocks. Have you watched the 2022 mentorship? Yes, that's the mentorship I suggest to all ICT traders. Hey, I just want to say this is awesome. Thank you, Anthony. Sorry, I'm really bad at reading the chat because I'm focused on, because I backtest for myself and I go live to help you guys, but I do focus on the charts versus the chat. But yes, ICT 2022 mentorship is the one that really helped me learn how to do all of this. And sorry for the stock guy. I don't look at stocks. ICT laugh emoji. Fair. If you don't like ICT, you don't have to trade him. Right, here we go. I listen. I don't knock people who don't, because if it doesn't work for you, it doesn't work for you. Like support and resistance. That's how I feel about support and resistance. It's a joke, but I don't knock people who do it. It just did not work for me. But yeah, it just depends on the person. But yeah, ICT 2022 mentorship is the one that let me be able to do this, y'all, if y'all want to go watch it. All right, we're up and stuck. It's not 10 a.m., so I'm sure these 9:30 traders are in this trade to this liquidity point. Some might get in after this inverted value gap, but it's not getting respected on the 15-minute. And on higher time frames, it will fully go above it and close. So you have to make sure, that's a really important thing, actually. If you mark a fair value gap on a higher time frame, you need to make sure the candle is closing above it on the higher time frame for inverse or respect. Because you'll be like, oh, it's a 15-minute fair value gap. Oh, we broke above on the 1 minute, but that doesn't mean anything. That's 1 minute on a 15-minute candle. That could be still 5-6 minutes, and then boom, we wicked it. We didn't candle close, and then you got faked out. You have to do, you have to respect the time frame. So if you draw a 1 hour fair value gap, yes, you can trade off of it on the 1 minute, but it's not confirming a direction until you bounce out of it on the 1 hour too. Institutions don't care or respect ICT concepts. I don't care what institutions respect. I hate when people say that. I don't. People who obsess with what banks and institutions do to trade are the ones who take 5 years to be profitable. That doesn't matter. I don't trade how you trade and what makes you profitable. If that's flipping a coin, if that's kissing your mom, if that's whatever, that's what you're doing. I don't give a fuck what the banks do. I make money whether they're trading with me, against me. I don't care. The only time I care what the banks do is when I'm watching my show, The Industry, which I love. And that shit is chaotic. Most of us probably wanted those finance jobs, and now we trade at home in peace, which I love. Okay, beautiful reversal. We didn't get a liquidity sweep per se, but we are showing strong signs of reversing back down. This could be a continuation play, but we do have a nice wick off of this as well. Now, this is one of those examples where you do have a big-ass stop loss, because the only candle closed below this fair value gap is here. We also have another gap here, though. You might can do this swing high, but technically it should be up here. But we do have a fair value gap here that, for me, maybe I'd wait for this to get inverse first. Because this could be a short liquidity sweep of here to go higher. But let's just see how this plays out. Strong red candle on the 15-minute, though. Okay, I mean, it went down a good bit, but it did not stop us out. It didn't even stop out this person if you were here, which is good. A 1 to 2 is not, I mean, almost a 1 to 2, not even quite. But it is kind of reversing on us. So I'd sell and profit somewhere in here. Once we invert this for value gap here, I probably would have sold, in my opinion. I would have sold here for a small gain. But let's see if it continues. I'm just being scary. Boom, me just being scary. And this is what I'm talking about, how people be like, oh, I manage my trades. This is why I don't manage my trades. I started managing my trades because I'm trying to get funded and not lose any. But this is why usually for me, I set and forget. And because it will play out, and if you lose, and you win, and you'll win more than you lose. So I should have trusted myself It did pull back. This is also why you don't move your stop loss to break even sometimes, because see, if you move your stop loss here, we're already paying 50%, stop loss to break even, you made no money, and then boom, it went your way. This is why a lot of people set and forget. And then we do have equal lows down here, so I'm sure it ran down in here. Just set your take profit, set your stop loss, don't move it and break even, don't do anything, because you leave so much money on the table. Especially as us ICT traders, we know where it's going. We know it's going to these liquidity points, and it did. We marked them on the 15-minute chart, and it went straight to them. We called them. We call this every day. What is this guy talking about in the chat? It doesn't even matter. Institutions look for simple liquidity that retail ICT traders give up. I should stop trading within 12. Not really. ICT traders are the most funded traders, actually. 3 prop firms have said that now. Actually. Also, ICT traders are the ones who usually get funded and get profitable in less than a year. That's why people are mad. A lot of people, yes, they're great. I love a lot of retail traders and like support and resistance traders, all those traders, but a lot of those people took 2 to 3 to 5 years to get profitable. But again, I don't want to argue strategies. If that works for you, supply and resist, support and resistance, supply and demand, like I don't, like we all make money. I want us all to make money. I don't want to shit on people's strategies. I don't care. And I don't want people to shit on mine. We've seen it. I backtest it every day. We do like what, 10 to 12 trades every night. I trade ICT and we have 1, if any, losses every night. So you can say it's a scam, you can say whatever, but I'm showing that it works. I'm showing that it's profitable. I'm showing that I'm profitable under a year. Like, I'm showing the things. But again, I'm not gonna look at the chat. Y'all can argue in the chat. Let's do one more, and then I'm gonna go make me a cocktail and enjoy this Labor Day in Mexico. Okay, 15-minute chart. We have liquidity on the sell side, and we've already bounced up like we're going in another direction. Is there any more sell? We'll mark one more sell side just in case. And then we already have an internal one. I'm gonna mark this because we're already almost there. That's something that's probably gonna happen before we get on the charts at 10 o'clock. And then we have this one, which is pretty good. And then we have a London high, obviously. And also ICT to some people is just simpler. Like obviously, you know, supply and demand will be simple for some people. You know, for me, ICT, I don't trade like all his concepts, but liquidity and imbalances, that's all I trade. That's very simple to me. And I can see where it's going. I don't go in with biases like a lot of people do. Why do we come back to retest these imbalances? I don't know, Uriel, if you're talking to me or you're talking to Mr. Toothbrush. I don't believe it. Why challenge viewpoints? There's nothing. It's trading is like we're all just trying to make money. Honestly, it should be us against the institutions. But when people who come and want to argue what's the best strategy of us traders who trade at home, I think is the dumbest thing. What is there to challenge? Do you make money? Yes. Do I make money? Yes. Cool. We made it. All right. Clear continuation trade. 10 o'clock candle closed. I think you could get in this trade. We are kind of at a liquidity point to reverse from, but I do feel like we might push just to this next one. Strong long candle in the 15-minute for extra confirmation. A lot of space from the EMA. I think you can take this just down to here. Stop loss maybe above the body of the candle. Again, we usually wait for the reversal. So that's why like continuations are just, they're just a different breed. It still can go down, but yeah, this is why it's like, you could only just trade continuations. Only just trade reversals, which I pretty much do because of this like this. We're at liquidity. We wait for our liquidity sweep. We got our reversal. And then we're in the trade back up to buy side. So for us reversal traders, obviously that would have just been something you lost and got back in, or you would have closed your stop loss. As soon as I saw that, our stop loss was up here. As soon as I saw that move, we were out. We're definitely out of that trade. So it wouldn't have mattered. Small loss for this big win you're about to have. That's why like you don't have to get scared of losses. The hardest part of trading really is probably got in somewhere down here, up there, was managing your losses and not letting them fuck with you. Like yes, you lost, okay. Now we're getting our 10 a.m. reversal. Boom, and it ran up the rest of the day. Didn't stop us out. If you had yourselves at break even, you would have gotten stomped out, but it kept running up to buy a sign. That's all you want to trade with ICT. You want to just trade liquidity to liquidity. Wait for liquidity sweep, boom, take it to the other side. Then once we sweep some of these, it'll go back a little bit for the other sides. But look at that beautiful trade. Waiting for the reversal. A 10-year reversal, again, bigger than the 930 move. Yes, this is a not as clean 930 move down, but boom, our 10-year move was the one that really usually is the thing. And then obviously continuations, you don't even have to trade them. That was one where like, I don't like trading continuations unless like these liquidities didn't exist. And then this was the only one left. Then maybe yes. But we had a bunch of liquidity points down here we could reverse from. That's what I trade. Proper risk management would have been no. That's what I'm saying. There's no proper risk management. Go to break even when it went your way and you were right about the trade. Because if you know market structure, things have to rebalance. So yes, things will go up and then it'll come down and it'll go your way. And it swept some liquidity. You left so much money. Well, yeah, you didn't lose any money, but you left thousands of dollars on the table. Again, just set and forget. Alex, what is his name? Alex FX is the same way. Again, everyone's different. But me, I became less profitable and I made so much less money when I started trying to manage my trades. Like, ooh, stop loss at break even. Ooh, trailing stop. Like, as an ICT trader, mark out a liquidity point, even if I just set it for here, and then go on about my day. Like, that's it. I set it because it's going to go to liquidity and liquidity. That's it for me. Now, again, that's you and you're going to manage your trades because some people say that. That's good for you. But for me, that I just hate when that happens because I know where it's going. It's worse if I knew where it was going and I'd rather fully lose. I'd rather it fully stop me out and just reverse than me get stopped at break even and goes my way. So that is the first black line not a target? Yes, these are all target points, liquidity points you can target. So it's a swing high here, it's a swing high here, but this is the London high. So I trade session highs. But this is like if I'm scared or I already made enough money, I would sell here. And then this is the session high, the session before New York. That's where this was. If that makes sense to you. There's no reason for price to come back down to break even. So being break even early is smart. For you, again, that could be you. To me, it's not a thing. For me, I just know I'll just target a liquidity point. There was a reason. That was a higher time frame liquidity to reverse from. After we had already swept so much on the downside. We had already ran down a lot. We were due to rebalance. We went up to the London highs. We really need to rebalance all of that. We had no reason. We were going up. Trust your conviction. Now, again, if that's how you trade, I know traders who trade like that. Like there's a guy on TikTok, I actually really like his trailing drawdown strategy. I tried to use it, but it just doesn't work with ICT. But he gets in the buy, and he goes every 40 ticks, he takes profit, and then he puts his trailing stop at 20 ticks or something like that. That's not enough for me, but for him, it works. And then if he has a runner, he lets the runner run. And that's his safety net. He makes money, which you can do that once you make a bunch of money. I feel like once people make a lot of money, like these little moves are like tens of thousands of dollars, so there's no point of holding it. But for us beginners, like a lot of us want to, this is like, for me, this is like a $500 trade versus break even. Like to me, like that's a good money that I want to make. But again, to each their own. Like I said, just as an ICT trader, I know that break even and trailing stops have really fucked me. It really pisses me off. I really only use them after a loss, but then I get mad. Like I do a loss and I don't want to double lose, so I move stop loss to break even, not have like a bigger loss of a day. But then it'll run my way and I could have made like so much more money even at the end of the day, like a little bit in profit, like $20 when I could have been in profit at $600. And that's why I'm like, fuck man, fuck these trailing stops, fuck break even, set and forget. What I'm about to start doing, especially in my Discord, because I sit on live on TikTok for y'all when I trade live, but in real life, I really trade for like no time, and that's just me. Again, with ICT, like you like supply and resistance. For me, I don't trade long. I don't like it. I got into trading for freedom. I trade for an hour or two tops. If I don't get a trade, I don't give a fuck. I'm not gonna sit on a charge for 6 hours just to make money. I like my freedom. So that's just a me thing as well. So my trading is catered to my personality. Quick trades, least fake outs. I know every day at 10 a.m. we should reverse. Sometimes we continue. Hopefully it's obvious I can catch it. If not, oh well. But That's how I trade. This is it. I mark where it's going to go. I don't go in saying, oh, we're clearly going down, we're clearly going up. Some days it might give that. But I wait for it to, because here it went up thinking, oh, we're going to sweep buy side. We did not. We came down, swept sell side, then it gave us our reversal. And then anything that happens before 10 a.m., I don't give a shit about. And that's how you have to be at the beginning. Once you get experience and you're calm and you like trading, I mean, I love trading, but once you get calmer and more experienced, then you can trade every little thing. But in the beginning, we have to focus on one thing. It's going to make us money. It's going to make us rich. And then whatever happens outside of that, we don't care because we get so caught up and distracted as beginners in all these different things. So this reversal, all we needed. Break even would have stopped us out. Even though this didn't even go far enough for break even. For me, I like break even like how someone asked about my lines. I like it at a first liquidity point. Then I'll move myself out to break even. And then it'll come down and then, London highs. That's usually the only time I move at break even. Like we hit a liquidity point or like an hourly high or something like that. And then I maybe move it in profit a little bit. But more times than I know when I do that, I'm mad about doing it. I have to be really unsure about the movement. But you see how I call this. Every day we back test. Every day I do this, an hour a day. Calling it, we have 1 or 2 losses every session out of 10. ICT concepts work. I don't care what anyone says. Support and resistance works. Trend lines work. EMAs work. Whatever you want works. Just back test it. Back test the time frame it happens in for you, and then go on about your day. My lives are for ICT traders. If you're not one of those, I don't want to argue with you in my comment section. You can just leave, or you can be like, oh, that looks crazy. Like, I love 9 to 5 trader. We both support each other. We both do each other's lives. He trades supply and demand. Every time I'm on his live, the charts look crazy. His supply zones get ran through, and then it reverses, and he knows how to play them. But I'm like, how did you? It just got ran through, and then it came back. Like what? Like for me, like it's just not helpful for me. We'll do one more, and then I'll get off the charts. Like I said, for me, ICT, it was like I saw the markets that way. That's what you need to see. If supply and demand is how you see the markets, then that's how you see the markets. And honestly, ICT and TGR explain how ICT works with how the institutions trade. But for me, I'm not going to explain that to y'all because I don't really give a fuck. But I know people like to come on like, you think banks trade ICT, da-da-da? I'm like, no, but ICT he explained how it goes well with how banks trade. But again, I don't care how the banks trade because I just make my money and I'm done. All right, it's trading a little sideways. We're in a little consolidation range. So we'll see. We do have a lot of fair value gaps on the sell side on 15-minute to either reverse or inverse from. So it's looking like a come down, bounce, go higher, but let's just see. I'll mark it, but it doesn't have to do that. We do have a gap here too. It can come down as well. We can mark that too, but I don't think it's going to come all the way down there, but you never know. You never know. And then on the buy side, we marked it, and let's see if there's anything further. Ooh, a fat gap. So we might actually, I think we're gonna come down in here and then just run up. There's so much to balance out right there, but it could not. It also might not happen in this day. That's why, like, for people who go with the bias, yes, you're right. It's gonna go there eventually, but like it might not happen in my trading session, so I don't like to do that because I've been chasing those equal highs all week this week, and we have not hit them yet. So I made money this week, but like I was like, we're sure hitting these highs today. No, we didn't. Oh, we're for sure hitting these highs today again. No, we in fact did not hit those equal highs yet. And at this point, it's like quadruple equal highs. So hopefully it smashes through them. Are you on prop firms? I am on Top Step, and I'm gonna get my funded futures one next. Let's see. Boom. See what I'm saying? Before 10 o'clock though, so let's see. We get a nice reversal, or it can come sweep this next one too. It could keep going down. Boom. Beautiful reversal right at 10 o'clock. It's a little messy, but we got a reversal. We got a market structure shift Here, again, ICT also is that market structure shift, and the optimal trade entry really switched the gears for me. Because even with supply and demand and support and resistance, I knew how to chart it, but like I didn't know where to enter and where to take my profits. And a lot of people ask me that on my trades as well. Okay, well, the candle that broke it is way up here, which is very annoying. So maybe we wait till it comes back into this gap like a little bit. Stop loss. Oof, there's a lot of gaps down here too. We'll just do it there. Then there's liquidity here, which I don't like that risk to reward, but we do have a lot to balance. So let's just see if we just run up. How far we run up. Okay, lost. And then I would say it's gonna go our way now. Boom, just a tight stop loss. Went our way, stopped us out. That sucks. This is one that you just couldn't help, because even with a regular stop loss, your stop loss would have been above this. Or this would have been the one, like if you had a bias, you could have waited for it to tap this final liquidity that we marked. Because I marked it. I think we were going to go down that far after this little push, but we did. And then you would just got back in the trade for a nice turtle soup. Something like this. So that's something you just couldn't avoid. And that's our first fake out, honestly, of this whole trading session. And honestly, of this whole weekend trading session, actually. We haven't had any 10 a.m. fake outs. See what I'm saying? Like the 10 a.m. fake outs are just so much less. So see, you would have gotten in and on the second one, and you'd have made, I mean, this is a big loss. So you probably would have made your losses back until you got like up here, but it's just part of ICT. So sometimes having a tight stop loss isn't the worst, but you know, or if I waited for it to tap into the bottom for value gap, then my loss would have been smaller. But yeah, you don't care because you're going to make it back. And you did. What platform is this? This is FX Replay, but it looks like TradingView, which is how we chart. So FX Replay is how you just replay, and you can go back any year. You can go back to 2019, you can go back to 2020. You're still in your combine? Yes. I'm on a 50K. I'm on a 50K eval, and I'm up $700. So I need to make $2,300 more. I full ported it to get funded, but Top Step has a consistency rule, so you have to make sure you get funded in 2 trades or more, not just one. But for my funded futures, you can full port, so I will be full porting that one. But yeah, this platform is FX Replay, and it lets you back test and show, and you can actually set orders if you want. I don't, because I like to like this, like get out, get back in, you know, type stuff. But yeah, I'll see y'all tomorrow, and then I'm live trading tomorrow on YouTube as well, so we'll see how it works with my OBS. If OBS is glitching with NinjaTrader tomorrow, then sorry YouTube, back to not trading live. And also y'all take advantage of me trading live, because I will be starting a Discord probably November-ish, December-ish, and it will not be free, unfortunately. So yeah, but I do trade live for free now. I probably will do it until I'm funded. Might do it to my first payout. I haven't decided yet. But I don't want to have my Discord started at all until I've had a payout or two, for sure. I'm not a scammer. Even though I don't mind people charging for Discord if they're not, because you're still trading off them. You're still watching them. So I get why people charge when they're not profitable, but I think that's dumb. I'm not that kind of person. So who knows how long it will take. Because I could blow these accounts once I get them, and then the Discord doesn't come for another year, but knock on wood, that is not going to happen. I'm pretty profitable, pretty consistent now again, and I feel like I'm over the hump, and I'm trading how I'm going to be trading for years, which feels very good, but I'm making sure it doesn't like mess up my emotions, so I'm super excited, and I'm taking shitty trades. So yes, tomorrow morning, 9:55 a.m., and then tomorrow night at 8 p.m., these are all Eastern times. I'm not on Eastern time zone, but I always talk in Eastern time for trading, for obviously futures, NASDAQ, for ICT. Everything is on Eastern time. So I will say that. And then, yeah, see y'all tomorrow, and then we'll back test tomorrow night just like this again.